Hello guys, welcome to another video from Jonathan Schultz. Today we're going to talk about the corn market and where we're at and where we're going. So we are approaching the bottom of the corn market. Today is July 30th of 2025, and is it time to go long? I think we will be going long soon, but we're not quite there yet. Before we begin, I do have to have this information said. I am not licensed to give trading advice. Trading future commodities contains a large amount of risk. I'm not responsible for your losses you may incur from listening to this advice. This is part of my job, that's why I know this information. No matter what, you should know your personal cost of production and the trends for your respective crop. That is probably the biggest thing to making money for crop farmers and having a good crop. And I do not make any money from these videos or giving out advice. I do this for free. I enjoy it. I just want to help my fellow farmer. So continuing, we're going to look at the latest WASI report that came out earlier this month, just about 3 weeks ago. So we'll have another one coming out in August. Basically, what was said on this report was we have diminishing ending stocks that increased the exports by a decent margin. 1.66 billion bushels is what we're looking at off the July WASI, which is a decent amount less than what we had last year. And I'm just going to go off the top of my head, but I remember a 2.45 billion number at this time last year. So we are considerably less than what we were a year ago. However, we still continue to trend down. I'm not going to talk about soybeans today either, just because I like corn. But like I said, ending stocks, they went from 1.75 to 1.66, and it was actually on the lower end of the range and the consensus. So they're planning for less corn out there than we anticipated. However, the real shocker was the worldwide stocks. So they had the range pegged at 274 to 285, and these are million metric tons, they're not billion bushels. And the consensus was off by a rather large number. I would say that's probably about 2%, which is, considerable talking about these large quantities. And we continue to see that in our exports. Our exports have done well, but right now I think for the next few weeks we need to have about 60 million bushels a week just to export. We already got them sold, we just got to keep exporting that amount. So worldwide, if we can keep exporting, our currency is down. If it wasn't for tariffs, man, we'd be close to being out of corn, honestly. But the markets don't really reflect that, do they? So we're going to look at the December 25 corn chart. Here I have the high of the market this year for December 25 was on February 20th, and we had about 479 was the highest on the board that you could get, and I don't know how many people got that price. And then we had tariffs announced, people got scared, Chicago exited out of their longs, continued to dwindle down, then we had a nice kind of bullish back during planting season, and then traditionally we have a higher rally around June for a weather scare, but the weather seemed to go well this year, and Chicago thought the same thing. So we continued our way back, made a little W, and I believe that, I don't know when that was, but we had a lot of volume on those days that pushed the market up. However, we just didn't have the momentum to keep moving forward. That would have been interesting to see if that would have capitalized. But I definitely had some guys ask me to sell on that day, and I definitely said yes, sell at 440. So that was a good day to call me. Anyways, continuing going down, we made a low about 408 a few weeks ago. Then we had a technical rally back, a little bit of a retracement to 430. Couldn't break it, and then we're back down trading lows. And I think over the next week or two, we're probably going to make a new low. However, this year, with the current stocks that we have and the use ratio, I am having a hard time believing we're going to go below $4. It's going to be a big battle to do it, and if we do, we'll probably hold at 396. But I don't think we're going to have the same low that we did last year. We just don't have enough corn on the books to really see it drop that low. But an interesting thing that I thought about February 20th, it was exactly 180 days after August 26th, which was the low of the market last year. 180 days exactly. So if we take February 20th, you add 180 days, that gives us August 19th as a projected low. And the way the market has been running this year, we're running a week or two faster than we were a year ago. Same thing with planting. Planting was quick, and the crops are growing quick. And right now, the crop conditions are very good across the whole United States. So that's what's keeping the market down domestically. But that's why I'm predicting a low. Perhaps not that week, but the week of August 11th. I think that's when we're going to find our bottom for the year. To add evidence to that, this is the December corn chart for how it trended for the last 5 years. So you see percentages instead of prices on the left-hand side. That is just saying if you sold in the second week of June, you would have gotten, on average, over the last 5 years, 100% of the value. So like we said earlier this year, February was the highest. This chart would cap off over here and then trend down. So on average, for the last 5 years, the market for December corn has bottomed out about August, the end of August or the beginning of August. And 21, 22 were some odd years where the market kept moving differently than it traditionally does. So that kind of skewed this line. That's why I'm still thinking that it's going to be a week or two behind. But no matter what, the trend does agree that buying corn around that time definitely makes sense. Continuing on, this is the net positions that Chicago has. So they're always long. On the left-hand side is the amount of contracts they have. And this is a 10-year average, 10-year trend. And then the green is the highest amount of longs they've had. And the red is the lowest amount of longs that they've had. And the red line is 2024. So last year they actually had the lowest amount of longs they've had in the last 10 years, which is interesting to me. And this year, we're just having a hard time getting close to that amount of shorts, if you will, or less longs. And we're kind of starting to bottom out, which usually indicates, a bottom of the market. Last year, it was the second week of August where Chicago bottomed out on their contracts, and then a week after that, we made the bottom of the year. So it takes some time for that to facilitate. However, earlier this year, they were the longest they've been in the last 10 years, which is ridiculous. There's really no reason for them to be doing that other than playing the market and making some money. And fundamentally and technically, there was just no reason to push the market like that. However, if you're a farmer and you sell off that, you can make some good money. But on the flip side here, as we find that bottom, it'd be a good time to go long in the market if you would like. This is the July corn 5-year average trend line. Like I said earlier, after December, we don't have prices, we have percentages. 100% in the last 5 years would have been first week of May. But you can see the July contract likes to bottom out about August, and then it just keeps on going up typically. And I really don't see that trend changing this year. I am just worried about exports. Exports are really the name of the game this year, and if we can continue to have good exports, and we do continue to have good exports, that points to a really nice rally going into next year's July. So if you haven't sold your corn yet, definitely do not sell it. Don't sell anything unless you need money, and even then, I'd rather you sell your car or something. just for short-term cash to make it by, if you can do that. Do not sell at this market. We've been climbing down for a couple months now, and it just does not make sense to sell against this market at all. So don't do it. However, in a few weeks, on the week of August 11th, that is when I'm predicting the low of the year, and in between August 11th and August 19th. And I bet that WASI report, I don't know if I would buy before the WASI. I'd put an order in at like $4 to buy a December corn contract. Maybe even below that, you might get like a $3.99 or $3.99.5, depending on how the market trades. Up until then, it might be pretty choppy between $4.15 and $4. But depending on what they do in that WASI, it could push the market back up, or it could even push it down. But I really don't expect December to get below $4 much this year. So that's what I'm going to do. That's what I'm going to buy. So if you are just speculating, you can purchase calls or futures on the December 25 corn contract on the week of August 11th. And if there's a big down day before then, calls might have extra devaluation on them, so you can buy them for cheap. Otherwise, just wait until the market kind of finds its bottom on that week and look for the opportunities. And at the same time, if you're a hog farmer or farming other animals and you need additional corn, that would be the time to buy it as well. So that's my video, short and sweet. If you got questions, you probably know me. Jonathan Schultz with Schultz Farms.